I was wondering maybe if we could start off by telling your Warren Buffett story and what story you told me that got me to come back and try something a little different.
Yeah, no, I'm happy to. I had some experience with Warren Buffett back earlier in my career when I worked for a broker-dealer. And one of the responsibilities I had was to help to create products that would be appealing to our customers. And so we were at the time working with a lot of unit investment trusts, which is like a mutual fund, except it's not managed. It's just a basket of securities you buy and hold. And the basket of securities I suggested that we buy was one share of Berkshire Hathaway's, which at the time was, $17,000 a share, one share of Gillette, one share of Shearson Lehman, just everything that Warren Buffett owned and everybody knew he owned. But when you gathered one share of each of those, the trust was 97 or 98% Berkshire Hathaway's. But because it was a unit investment trust, you could actually buy just $5,000 worth. Well, $5,000 worth of Berkshire Hathaway's was just not something that anybody could buy because one share of it traded for $17,000. So we were trying to democratize investing in Berkshire Hathaway. And it was spectacularly successful. The marketplace really accepted this idea, and we sold hundreds of millions of dollars of that security, and then sort of faced the wrath of Warren Buffett. He did not like what we had done. One of his theories, and it is a true theory, is that you can have more success as an investor if you limit transactions costs. And one of his principal criticisms of Wall Street is that transactions costs play a big part in the acquisition of a securities portfolio. So he's always sort of felt like Wall Street made too much money, and so he has this high stock price because when you invest in 100 shares of Berkshire Hathaway's at the time, you're putting away $170,000, and it's costing you the same as that if you bought 100 shares of a stock that was substantially lower in price. So you were able to pay a lot less to put a lot more money to work. Of course, the problem is our clients, who don't have millions and millions of dollars as a rule, couldn't put money to work at Berkshire Hathaway's. So he was upset that we had done that, and his annual report that year, he spent a page railing against the villains on Wall Street, and it hurt my feelings because I thought I was doing good, right? Getting people an opportunity to invest in Berkshire Hathaway's, I thought was a noble thing, and frankly, the market thought so too because we were so successful. The next thing that happened is that Warren Buffett said, "I'll get even with you nasty guys on Wall Street," and he created B shares. So now if you want to buy a B share of Berkshire Hathaway's, that's only, I don't even know today, $1,300, $1,700 a share, something like that. So it's still very difficult for a person with an average size portfolio that seeks diversification to buy 100 shares of Berkshire Hathaway's, and buying fractional shares. Nobody likes to see 18 shares in their portfolio. Frankly, it doesn't matter, but people just don't like that.